All right, so we're looking at the post effect of 8:30 high impact news driver. We have a huge premium opening. So we're going to look at that real quick over here on the 15-minute time frame. And we'll look at it through so we had a previous settlement close at 18,846. So you can see we're up here in the 920s. So it'd be a large gap. Now we're in, let me go back to a daily chart. This inefficiency here, that's what I'm annotating there, and that weekly inefficiency, that larger one. And then there's one right in here. Okay, see that? It's got these dashed lines on it. So we traded down to that, and then traded to the high of this inefficiency that I'll change a little bit in terms of the colors that we can see. Okay, so that's where you're at the top of that right there, right here. So they're putting relative equal highs in there at the high of that inefficiency. And there's a small little inefficiency in the form of a volume imbalance between this candle's close. You see that at 924.75 and the open at 21 even. So they accomplished both here. Trading to the candlesticks low here and repricing to that volume imbalance. Okay, right there. You see that separation between these two bodies, these candles respectively. That's that reprice right into that. Now I want to see if they want to make that area a little bit more jagged, or if they're just going to be content with leaving it just as it is here. This is a 15-second chart over here on the right-hand side. Go down to 15 on the chart on the left. 5-minute on the left-hand side chart. I'm watching this inefficiency right here on the 15-second and with the order block right there on the 5, seeing if they have any interest in that. Maybe as an inversion. There's a sell side resting right down at 888s, 886s, right in here. There's your opening gap. Previous settlement to opening. Half the gap's already traded to. And there's that gap I was telling you, use it for inversion in here. Volume imbalance included. There's that. It's almost like voodoo. Almost full gap closure. You see a little separation in there still. So deep retracement back down inside that opening range gap. Half the gap closure. Be interested to see this same inefficiency on the 15-second chart. If you can climb above that, find that as a discount array, be interested to see if they want to swipe that 18,928 level. So if you see the little shaded area here that's a little darker than the other area up here, that is the top of an inefficiency on a higher time frame chart. So I'm watching that to see if there's any kind of interest in using that level in addition to this inefficiency right there. Right now there's buy side sitting at 928. Sell side resides at 852. Okay, so we had the gap down here used, ran back up into inversion period gap, wick through it, the bodies are staying below it. New day opening gap on the 11th, today's new day opening gap, drawing liquidity, watching the midpoint of this wick here. Okay, full gap closure, notice the bodies right here at that's this level here. Okay, so previous settlement on regular trading hours, you can see that down here, the right hand corner. New day opening gap, and then to the top of that old daily inefficiency. Okay, we're seeing if we can find the previous settlement. Does it want to explore lower? Or if it gets back inside the range, we have to wait and see what we get in regards to that. So far, it's been delivery off that inversion period gap here for a gap closure. Okay, we're inside of the gap. That's this from here to opening price. So this previous settlement price and here, we're back inside of that now. Now it can do a lot of this type of wicking and redelivery back in here because there's no real bodies. Notice that here. Let me highlight it on the chart to the left. I don't want that color because it's not gonna. So in between here, there's no bodies. There's wicks there. Then we have one single candle body down. So what we're seeing here is actually very efficient equilibrium price. It's going right back up to reprice over top of that little segment of price action right there. Distinctly framed by these bodies in that previous settlement price there. Now my interest is, since we had this area here and we redelivered price, does it have a willingness to come back down, and does it respect the top end of that blue box area there? Because if it is, it becomes now a balanced price range. If it trades below it, that is decidedly weak. So we're at a juncture where the price would need to have some respect of that blue area where it's at now, or if it goes below it, all this was is retracement back into the opening range the first 30 minutes and after the gap closure. See how price just delivered there. Next key levels, Thursday, last week's daily low. Watch this line in here. Okay, that's that old. Let me take you out to the daily. That is this. See that candlestick's low right there on Thursday, September 5th. That's this dashed line. It's a little hard to see because I got these colorings on it. Watch that and the end dog in there. Because we broke lower here. Then we'll watch the bodies in here. This inefficiency there to here. I'll make it color like this. This gap here trades down to that and end dog for today. And we're back inside of that inefficiency I outlined on the opening range gap. So we ran south side here, dug into this inefficiency a little bit. So that 8-10 level, we're just below that candlestick's low there. And now resume your attention back on this little segment of price action, which is framed on this area here where they delivered the bodies. If you're just looking at the 1 minute chart, like over here, this could be a little perplexing. So now we're banging at the bottom end of that 1 minute gap. All right, so we had a gap open higher, came down, filled the gap, tried to rally, treated that area in here as a balanced price range. And we took another whole sell side liquidity. I'm change this to electronic sessions now, because we have opportunity to seek. It's a little smooth in there, even if it doesn't want to get down to the consequent version of this wick. This is a 1 minute chart on electronic trading hours data, not regular trading hours. That wick's consequent encroachment, I'm eyeballing that. The smoothness of these two relative equal lows. They took the sell side between this low and this low, which was a little too shallow of a jump below there. So now we're working inside. Now watch this wick here. So we're kind of like this. Why does it do that? Always jumps. There you go. That's good. All right. So back into NDOG, and the high of that shaded area here. You can see quickly why I don't like to have all this stuff in my chart. Just the numbers is enough, and you constantly I'm constantly referring back to that level and where price is at. But for visual representation, for Caleb and for any of you that are interested in watching, is having on your chart, you can see the behavior of what price does when it gets there. See how the bodies are staying right at the top of that shaded area here? It isn't like a, I guess it's like a, I don't know what color that is, to be honest with you. It's just not the gray background. The body's just laying right at the top of that dash line. That's the high of this inefficiency here. Okay, see how it's delivering lower with minor sell side. Now here and over here. That candlestick's low, that candlestick's low. Buy side would be on the other side of this balanced price range, which would be right here. So this would be your minor buy side and your minor sell side. That's the pool of liquidity that matters, not your book max stuff. Okay. Now, if you remember a moment ago, I was showing you, watch this wick here. And I drew that line here at the midpoint, which is 118.817.75. And I told you, watch the bodies in here. See how it's showing you it's respecting what? What's it respecting? It's the high of that inefficiency. And then here's that wick's consequent encroachment. It hits it there and delivers down into this range. That right there is enough for a scalp. So if you're having these higher time frame inefficiencies on your chart, and you're watching how price is moving and gravitating towards short-term sell side and buy side, you don't even need to have the full range delivered. And you can get these little bread and butter type, easy bread winning, scalps. Let's get them and take them and run. So what you're looking for is something that would promote a discount array to keep price from moving lower, but not go sideways, allowing and affording buy side delivery. That means moving higher in price. Or identify a premium array where price should not go any higher, but do not go sideways, but affords the opportunity for sell side delivery to unfold in price or move lower. Again, I told you the 5 minute, the 1 minute candlesticks wick right here. means maximize it here. That low up to that high. 18.75. Okay, that's what I'm highlighting with that little line that I drew across earlier, right there. Look how it came up and hit that again, right there. That's a turtle suit. Old high, hits it. What's it going to do if it goes there? Well, it can run down to that and then target the lows I told you that my eye was drawn to here. And then that consequent encroachment of that wick down here. I'm going to show you what I'm referring to here again for the folks that are not really getting what I'm talking about. If you look at your daily chart on the NASDAQ, isn't it fun? When you start seeing price like this, you're never ever going to fear missing a move. You're never going to miss out on anything. Let's put it that way. Because there's always something to do. There's always something to engage in. There's always an opportunity. Actually, I started zooming in without showing you what I was pointing to. Okay, here. This candlestick, this big one, this wick, that low is right there. So what I'm doing is I'm highlighting this candlestick's low. And now I'm going to change it just a little bit in color so that way you can see over on the right hand side. See how it's different now? That's the high end of that range right there when we were watching it live together. I told you, watch this right here. See what the bodies are showing you? What this is, when I talk about price action and showing signatures, okay? This is where you write down stuff, folks, okay? You screenshot this, Caleb, and you start putting down in your own words what I've said, and then you start going into old charts, old moves, any time frame. The only benefit that these sub 1 minute charts provide you is it's lots more opportunity to study. And that equates to much more opportunities for the well-rounded, not, action junkie to go out there and trade all the time. There's certain things you still have to understand and look for. But look very, very close. What do you see in this swing high? What do you see? There's a couple things that's occurring there, and I've already thought about these before, but I want you to think about what's occurring there. And I'll tell you exactly what the signatures are. But here is that range, and it's anchored to this candlestick's low, which is there, and then candlestick's high here. So we're highlighting this big black portion of this big down close candle. Now we just expand it through. You see that? Let's go down into a 1 minute chart. So back to this level here, I want you to think, we'll go back to this in a second. The buy side's taken, drops down. This little area of porous price action. There isn't bodies laying over top, okay, between this candlestick here and this candlestick. These are two very broad candlestick bodies. In between them, we have this little indecisive candle that Steve Nielsen would say it's some kind of silly pattern. No, all you have to do is look at the body that started it here and it encapsulates it here. So that entire range, that's your volume imbalance. You will not draw it on that candlestick body, because some of you are thinking, you just drew that wrong, and you're typing up a comment if you already sent it on my previous posts. Just go delete that, because you don't know what you're talking about. So this is a real volume imbalance that's defined when you have an indecisive candle in the middle of it, okay? So that's another PD array. You add to it here, you can take something off there, and then we have a small little inefficiency as well between this candlestick here and that candlestick there. We trade up into it, hits, delivers, trades lower, and trades right to the tick. And then later on, we watched it doing, where was it at? All this body work in here at that midpoint of that wick right there. I know it's hard to see. Let me make it a little bit broader. So if we look at the 748, and there you go. So when you start seeing a wick like this, and it starts building bodies around that, okay, any short-term premium array, while it's creating this in here, you want to use that as a short. Or if you're already short, you can add a very small, like maybe toss in one more contract, toss on 2 contracts if you're holding like 15, 20 contracts. You just toss on a small little, just like kick it up a notch. Remember, like Emerald Agassi, he's a chef, used to be on TV, maybe he is still, I don't know. But he would always like, bam! And he would put the spice on it and kick it up a notch. It just gives it a little bit more kick in the ass when you got it right. It's just one more little chef's kiss, because it's getting ready to take off, basically. So when it's hanging around in here, what do you see? Don't worry, we're going to come back to this. You didn't finish this. I know exactly what I'm doing. Okay. Over here, what do you see? Do you see this gap here? Do you see the longest wick here? You see that? $768.25. Okay, extend that over, hammers it with this little gap being filled. So it's not just let's fill this in, you got to look at that wick. It's the longest one, so that means that's the one your eye's going to jump to. How far can it go past that little gap? Consequent encroachment there. Boom, it affords it. And then Tank City. Crosses over End Dog and an expansion even lower. This over here, when I was telling you, look right here, see what the bodies are showing you? They're indicating that, yes, we went all the way up to the tick of that End Dog. See that? Perfectly. And it's a high, highest high, lower high. So you have a swing high in place. But look what this wick is doing right there. What's it doing? It's only going half of this previous wick. It's exactly what I taught you to look for in this mentorship. 2024's mentorship. I'm taking you behind the algorithm, pulling the veil back, showing you things that nobody can show you. They cannot tell you the logic. I'm proving it to you in front of you live. How can it be cherry picked in hindsight? How do I have the luxury of being able to do that? I don't. I'm out here on a tight wire with no net. 18,831.50. What's the high of that candle? 18,831.75. You get one tick variance. So to get the high tick of that consequent encroachment, it has to deliver what? One tick above it. Is it making a run into the high of that same wick previous, the one that touches the End Dog? No. All right, so in this little area right in here, all right, see this little high? And we talked about that wick there. Let me take this off, clean this up. Bro says there's no algorithm. There's no algorithm, bro. If you look at this little, oh, I grabbed the fib that one. I need the rectangle thing here. Okay. So that's a small little gap right there, and I'm going to highlight it there. So now that low of this candlestick on that 15-second chart is this candlestick's low here that makes the high of that inefficiency. This candlestick's high makes the low of that box, okay? And that's this candlestick on the 15-second chart. So now watch what's happening here. Inside of this inefficiency, if you were just looking at a 15-second chart, you would think that this to this is your gap. When it's the higher level over here with this wick, consequent encroachment, you got to afford yourself the ability to trade outside that. If you don't start looking at price and start studying price like this and annotating them and then go back and look at my trade executions, you'll see why my stop is where it's at all the time. Where I'm placing a stop, why it's always looking phenomenal, and it gets close to it and you're all sweating. I'm using this logic. I'm looking at how far can it color outside the lines, okay? How far can this wick go beyond that little tiny gap between this candlestick's low and that candlestick's high? If you don't look for those types of things, you could be right about what it is that you're learning from me, know where it's going to go, nail down a really good entry, phenomenal entry. So this inefficiency in here, this one single candle on the 15-second chart, you think that it might need to come all the way back up to here for your entry. The low end of this rectangle here, which is this one right there on this candlestick's high on the 1 minute. That right there, that's where the entry would be. But your stop has to take into account that wick over here, it can trade up to this consequent encroachment. Now think, if that's occurring, what else do you have to factor in? The fact that this is an up close candle amongst down close candles. So that is what? Bearish order block. So your stop has to do what? Refer to that opening price, because that's the change in the state of delivery. In this price run here, that right there, that opening price, your stop has to have at least that in terms of where it needs to be placed. But that's a really big stop loss. No, it's not. I mean, it's a lot if you're trying to do 30 contracts on your funded account because they say you can trade it. I mean, I don't know. Is there even a funded account company that lets you do that many contracts? I don't know. It's suicide if that's what you're telling me. So your stop loss would have to be one tick above that. And that's above this inefficiency. See that? It trades up. Now, as soon as this candlestick closes and we start trading down, you would be watching and saying, okay, I have confirmation that the body didn't even close at the high end of this inefficiency, but it traded just a little bit outside of that one. That makes this a mohawk. All this price action here is a mohawk. We know that when this candlestick starts delivering like that. And any little retracement in here, what are we looking for? We want to see the middle of this inefficiency. Hold it at bay. It should not go any higher than that because it's already done what? It's done the work of going into the upper half of it. So we'll take this one off, say what I have to say about it, and then we'll close it for today. Look what it's doing. It trades to it. Look at the bodies. Is it indicating that it wants to go in the upper half of it? No. The bodies are telling you. They're literally telling you that we've already done the work here. And because I told you over here, it's spending too much time right there. And watch and see if we don't get a flush down into new day opening gap and expand lower. Did it do it? Did you hear me talking about going higher? Was it a buy? Was it something like a turtle soup long, something like that? No. So that upper portion right there should not be traded to because it's already been delivered there. At the same time, we're consolidating and building blocky price action with these bodies right at the consequent encroachment. A consequent encroachment of a wick, okay, when it has everything leaning that it's likely to go lower, if it starts building bodies of the candlesticks around that consequent encroachment, it's going to go lower. So if you've missed a price run, you missed it, okay? Well, okay, that's no problem. This candlestick, the fact that it runs into this premium array, consequent encroachment, use the order block as your stop placement. That's your high end. You got to be able to frame a trade that's small enough that won't hurt you if you get stopped out, but it's big enough for you to care about the trade. That's the balancing point. So when you go through your charts, Caleb, today you're gonna have to use mine, but the elements that price delivers like this with, that way you can get a good screenshot. Okay, that right there, that's this wick up here on the 1 minute chart. And then all the way down here, that's here, okay? So one of the other exercises, whenever you have a fair value gap on a higher time, when you do this at any time frame, don't think that what I'm about to say only applies to a daily chart. But if you have any inefficiency, think about what I'm saying. If you run standard deviations on that, that means if you use measure move concepts where this range high down to that low. If you take that range and you replicate it and move it lower, okay, so anyway, here is one standard deviation lower. So it's reasonable to expect it to move at least that much. But what happens if it wants to go just a little bit further? What did I teach you? Whenever you have a range or dealing range and you want to see how far it can run for external range liquidity, what's the easiest tiny little thing that you can change in your Fibonacci to get that level? Real quick, what is it? I can't hear you. Say it louder. The guy in the back on the right-hand side. What was that? 1.25. Right. You are right, sir. You are right. Damn, he read my mind. Go over to the 1.5 level and just add a 2 to that, okay? And then okay. Right there. That is a beautiful area to anticipate external range beyond the scope of just a measured move. You get that right there, you're content. You're done. Don't worry about chasing anything else. If you're trying to be a session trader, we're going into the lunch hours. Just relax. You would have made more points, more handles, more ticks than any other YouTuber out there. It would have just simply been an outclassed, just total decimation. Trading with this down to the wick over here. Getting that move right to the tick, that right there would have been a superstar move for you. Like you would, it would have supercharged you. It'd been like, man, I saw that coming. But now the problem lies in here. If you use that midpoint of that wick over here, that's that consequent encroachment. If we would have used that price with your limit, you never would have been filled. So then you would have had the conundrum of being right and perfect where price is going to go, but you can't get out of your trade. So you have to do what? You have to fluff up and afford yourself the flexibility to be slightly off with your exits.